Today, the B2B is about $168 trillion. It's bigger than the world GDP. And according to Asia Development Bank and International Settlement Bank, only 5% is financed. Imagine, and the rest of it is not financed. While the banking industry, there is a major attack today on the banking industry. Why? Fintech. The fintech industry is that new technology coming up related to financing, and they are competing with the banking industry. The best thing could happen to the banking industry is the digital economy, because it's opened the opportunity to generate more revenue and provide more services to its client and to its country. So from a business opportunity, it provides something like $7.5 trillion market opportunity to the banking industry. So that's why it's very important. Now, how this can be, do they know? Do the banks know that this is a major marketplace? The answer is yes, they do. And they did attempt to get in the B2B marketplace, but they were not very successful. Simple put, because they tried to approach the B2B marketplace to finance the B2B marketplace from a financial perspective only, and it doesn't work this way, the B2B. The B2B have four pillars, main four pillars. That is logistics and operation, finance, insurance, and e-commerce. So it must have an integrated platform that provides solution for those four. Then the financial institution can maximize its benefits getting into the B2B marketplace and achieve those economic benefits that we just mentioned. In the 6 steps that we talked about earlier, we said that step 1 is the digital catalog, 2, optimization of matching, step 3, increase conversion ratio, step 4 is financing. If step 4 is financing the transaction, means the financial offer must be before. So I have to present my offer as a bank before step 4. Then at step 4, I can select what financial package I want to finance my transaction to continue the process. So where is supposed to be? It's supposed to be in one of those 3. And in fact, it's at optimization of matching. What does that mean? What does that mean? When I am searching online the product I desire, and I find, like example, 1,000 person who sell buttons and I am a shirt maker, I want to sort between them based on who the bank will finance me if I decide to buy from. So there is an integral part of the banking industry must be part of this equation. And for the banks to do that in advance at this level, which is level 2, which is optimization of matching, they have to depend on real data, on the ultimate data quality that we talked about earlier. And the banks needs global scoring. Scoring to know that person who is online, the shirt maker that's trying to buy the buttons, how long been in the business, who he sells his product to, how much is his sale, is it increasing or decreasing? There is tons of data that I need in order to establish a score, and based on the score, the banking industry can provide the financing or not. And so to minimize what we call the underwriter risk. And when I provide the finance, I need to make sure that this finance that I'm providing are going to buy the bonds, not going to buy a car for his wife, his example. So through our system, it ensures the use of the proceeds, they call it. So to digital economy, you would have the data that you can, the validated data, the ultimate data quality. Through digital economy, you can have this global scoring that is key factor for financing the scoring. You must have scoring. As example, United States, if you want to go get the credit, they look to your score. So it must be also scoring mechanism so the banks can provide the finance. And also when the banks provide the finance, we need to ensure that the use of proceeds are going where are originally intended. And then also, if something goes wrong, the banks have access to the material that it financed, so it could be used as a collateral material in case something went wrong. And not only that, also that the bank can access this collateral material and what we call something like, we provide opportunity to make reverse auction to sell this product in case something went wrong. So there is multiple sides of the equation, but the fact is the best news for the banks is the digital economy to penetrate into the B2B marketplace. Just to give you an idea, when we did the assessment on the B2B marketplace from all the participants in the B2B, the least integrated in the B2B are the banks and the insurance. While the governments of the world are pressuring the banks to financing the B2B, to finance. They call it, in fact, the task force at the B20 is called financing growth. They were looking how we can have the banks to finance the trade, finance the economy, do their job at their local, like cities and countries. And it can be done through the digital economy. And without digital economy, it's going to be very hard for the banks and the financial institutions to get in.